Welcome back. In this lesson, we'll briefly discuss the income statement. So, as I've said in previous lessons, the income statement shows the revenue and the expenses of a company. Now, an income statement is meant to show a specific period in time. It could be anywhere from a 6-month period to a year period, maybe 5 years, 10 years. It could be any period in time, and we could come up with an income statement. So say, for example, if you wanted to calculate for 1 year, right? From January 1st, 2023 to December 31st, 2023 would be good for a year. So the two things that the income statement shows also is the gross profit and the net profit. So the profit, which in this slide is also mentioned as gross income, is the income after subtracting the costs of goods sold. And the net profit is the gross profit after all other expenses. So we also have other operating expenses, and accounting is a field where all of the accounts have categories of accounts as well, right? So we'll go over those other accounts a bit more in detail in future lessons. But for now, all you need to know is that gross income is income after subtracting cost of goods sold, and net profit is the gross profit after all other expenses. In this case, it's typically mostly operating expenses, so the costs incurred from running the business itself rather than the cost of goods sold, which in this case, or in this definition, the cost of goods sold is related to the costs to the purchase or production of goods, right? So anything that it takes us to acquire inventory or make the inventory internally within the business, any of those things, right? Once again, it's the costs related to the purchase or production of goods, and goods meaning inventory when they come into our business. So the way we calculate that is the beginning inventory we have in the accounting period that we start off with, plus the purchases, right? Any inventory that we purchase throughout the year, minus the ending inventory. Finally, what we have at the end of the year, after whatever is sold, we subtract the ending inventory, and then from there we get the cost of goods sold number. But from the income statement, we can also gauge information on if we're profitable enough to scale or expand the business, or if there needs to be costs cut somewhere, right? So that is the main driver or the main objective of the income statement, first and foremost, when looking at it. So the income statement can also help estimate future revenues, expenses, potential profitability, and other key drivers that have influenced the company's financial performance in the past, right? So as you get all of this historic data, you're going to start to see trends, and you're going to start analyzing what we can do in the future, as we discussed in the first lesson, based on the past statements. So this is something that allows for more opportunity and more growth for the business if those are the goals, which they obviously should be. But with this information, the business can make informed decisions based on the company's projected performance. So this is the most simple income statement example, right? We have a store in this example. Then we have the label of income statement from January 30th, 2023 to December 30th, 2023. As we said in the previous slide, an income statement is a period in time, right? So we have a nice little range there. So first, in the income statement, we start off with listing all of the revenues, right? So we typically have the sales revenue, service revenue, product revenue, but in this example, I decided to make it short, and we have sales revenue at $2 million being the main revenue. Then we have miscellaneous revenue, right? So say, for example, it could be anything random coming out of nowhere, right? So we got prize money or award money from the government for outstanding customer service, things along those lines. Or not the government, but just any award committee, board committee that reviews certain businesses and they hand out prizes and awards for outstanding customer service. So we have that for 500,000. And now we have the total revenue of $2.5 million. So now that we have the total revenues, now we calculate the expenses. So first and foremost, we look at the cost of goods sold, and that is $300,000. As we discussed in the previous slide, cost of goods sold is beginning inventory plus purchases minus ending inventory. So that is how we would get that number. And now we do also the total revenue minus the cost of goods sold, which is on the bottom left in the asterisk, and the gross profit is $2.2 million, right? We subtract the $2.5 million total revenue minus the $300,000 cost of goods sold, and that gives us the $2.2 million gross profit. And now all other expenses. So these are the operating expenses, the costs incurred from running the business itself. So we have rent expense for the building, that's $20,000 within this period of time. Then we have travel expenses where we need to go to business meetings or we need to go meet clients, and that is $5,000. And the total expense, also including the cost of goods sold, is $325,000. And now what we do is we calculate the net income. So we do 2.5 million minus the $325,000, and that gives us the $2,174,000 for this period in time. So next we will be going over the balance sheet. So hope you got a little bit more about what the income statement is. And this simple example hopefully provides a format that you could build off of once we get into more advanced examples. So thank you for watching, and I will see you in the next lesson.